Hello and welcome. You're watching Business Today Television. I'm Sakshi, Batra, and this is the earnings special edition where our focus is on Bikaji Foods Q1 numbers. The company's reported a strong set of earnings in Q1 with a 40% uptick in its consolidated net profit that's now come at 58.06 crores. We've also seen the consolidated revenues from operation have seen a 15.3% uptick to 555 odd crore rupees in the June quarter. Remember that the company's volume growth is also at a solid 16.2% year on year, and that's largely led by the double-digit growth across categories that the company has recorded. To detail for us the outlook going forward from this quarterly earnings onwards and the key insights from the fine print, I now have the top management joining in on the show with us. Mr. Manoj Verma, the Chief Operating Officer of Bikaji Foods, is now with us on Business Today Television. Warm welcome to you, sir, and thank you so much for taking the time out. First up, congratulations for another solid set of earnings that you posted in Q1. Do tell us at the outset, what were the key contributing factors that actually led to a sharp bump up in the bottom line? And this is just the beginning of financial year. You already have to see now the festive season start. That also gets an added on bump up for our sales and the volume figures as well. So are we onwards and upwards to sustain and probably up this momentum that we are seeing, sir?
Good morning, Sakshi, and thank you for getting us on this channel. Yes, of course, quarter one has went very well, and the kind of growth what we have witnessed, are by far ahead of the category growth. So, if we were to talk about our growth, so traditional snacks has grown at 16%. Our Western has grown, about 26%, and overall snacks, and if we speak about is about 18.5% growth. So that's the kind of growth what we have delivered. Another good thing is that this growth is not just on snacksery. We have got all across growth. So all categories have done well, say be it papad, be it sweets, and others as well. To your second question, I think this sets momentum for the year. Festive times are now around the corner, and the entire company is busy onto it. All functions are putting their best to make this a very good season for us. We see some uptick, so there's upward demand, so which in all likelihood should sustain because of the monsoons which are predicted, the normal monsoons. So we are pretty confident that this should move up.
Right. So since you talked about the monsoons, I was about to ask you that, rural versus the urban demand, where do you see the uptick coming in from and what could be the momentum, sir?
So even in the yester quarters, the challenge what came up was more from the rural consumption side. And that if we look at now, even when we were looking at our numbers, so our impulse category, what we call, which is 5 and 10 rupees growth, is little less than what is on the family packs kind of a stuff. So that's what was a little subdued one, but in this quarter we see that also opening up.
Okay. How about the volume growth picture, sir? You've already posted 6.2% volume growth on a year-on-year basis. What is the likely band that you're sticking with for this rest of the fiscal year on volumes as well as on the margins going forward from here? What could be the expectation?
So volume, if we talk about, so what we believe and the kind of budgets our teams are carrying is about 14-15% kind of a volume growth to give. What we expect is about 2 to 3% increase, which should come, on the inflation or on the price increase side. So that's the way we look at this year. In terms of the bottom line, we will sustain, and our task is that year on year on our EBITDA, we would want to add up, say, 50 basis point year on year for next 2-3 years.
Okay. And on margin picture, sir, you've already come in above 13%. What is aiding that, and what could be the rightful band that we could look at?
So if we look at, in terms of our margin, so there are lots of stuff what helps us sustain and grow it. So first and foremost is, of course, the COGS part, which is a very large element. So teams have done a good job in terms of, doing hedging, right buying, so which helped us, to make it up. The other are the efficiency part. So across channels, across, the revenue lines, we've tried to bring efficiency, and that's what has helped us do better. Even today, if we compare over last quarter or year on year, So our volume growths are ahead of our value growth. So this is the testimony to that we could save and we could pass it back to the consumer as well. These consumer offers at the same time gives us the leeway that in the adverse times, maybe we'll have to pull back, these consumer offers, which we did to certain extent in quarter one as well.
Okay, got that. Let's also see how about the input cost pressures, sir? We did see some of them building up for you. Are you already passing them on in terms of price hikes across categories to your customers? And what is the picture going forward looking like on both raw materials? How the prices will move up, and will you be able to continue to take price hikes?
So we see some upward movement in few commodities. Good thing with us is that no, it's not dependent on one particular commodity that which could make or break kind of a stuff. So it's a pack of lots of commodities. Let's say, for example, if a company who's so majorly dependent on, say, potatoes would really suffer because the kind of prices what potatoes, I mean, people are witnessing is going off the roof, and we expect it to further go up. For us, it's a mix of many products, and not everything will go up. But yes, to your question, we see some upward trends, like, say, for example, chana dal, potatoes. This oil, which is one of the largest component, fortunately is staying there where it was, and we believe that it should stay, more or less the same price. Overall, if we look at it at a weighted level, we believe that at a full year level, it will be 2 to 3% kind of increase.
Okay. Do tell us your plans as far as capacity expansion is concerned, sir, and what is your utilization right now going forward from here? What can we expect on that front?
So our capacity utilization in last couple of or 3 years, 2 years actually, is what we expanded our capacity, and that's what also was in line with to get the PLI incentive. So we have invested little ahead of time. Currently, our capacity utilization is close to about 45%. And as I said, that we plan to grow volume 14-15% year on year for next 2 3 years, and that's how would will take us to about 65-70% utilization over years. So in terms of capex investment, we need not invest now in near future. Yes, the investments would only come in for NPD or for maintenance or development, those are the things.
Okay. So, how about you did talk about PLI scheme? Is there any fund that you're still expected to receive from the government? And if at all, then by which quarter are you expecting it?
So, Sakshi, this PLI incentive was for 6 years, starting
Hmm.
21, 22 onwards. So 3 years have passed by. We already have got in our books for 2 years. That's been dispersed. For last financial year, we will get it in some time, because those audits, government audits, and all that stuff. And thereafter, 3 more years, so which means 12 more quarters is what we will be getting this stuff. So in all, it's about 261 crore rupees, which would come to us as a PLI.
261 odd crore rupees. Okay, sir. Now, do tell us, sir, as far as your market share in core markets is concerned, what is it at? And are you already looking at some strategies to build on the market share in core segments?
Yeah, in core states, now we have about 44% plus market share, which is one is to hold share, and then second is to gain share there. So yes, there are lots of efforts, initiatives, which are there in these territories. We are looking at in a micro way that what is urban, what is rural, and where the opportunities are more to do that stuff. So yes, our teams are now onto it, and there are strategies which are getting executed on the ground.
Okay. Do tell us, as far as your Western snacks are concerned, it's a very small portion right now. How are you seeing that build up, and going forward from here, when do we see sizable contribution in revenues coming in from your Western snacks as well as your exports also? If you could combine these two, sir, and tell us.
Sure. So, Western snacks is indeed a very small pie of our overall business. It contributes to about little over 8%. And uh, I would want to reiterate that is a traditional snacks company. That's our core focus and will always be. Western snacks is an opportunity, and incidentally, it's the same platform. So the value chain is more or less the same, right from the factory to distributors to retailers and consumers. And we didn't want to miss on that space. That was the objective of getting into this. We have expanded our capacity and ability to produce everywhere in the country. So it will move on. What we see is in next 2 years' time, you will see that this contribution from 8 would go to about 10.5, 11%. That's the kind of business we expect. So it will never be our core business. That's one. Onto export stuff. Yes, till now it's about 3.5% contribution to our business. But the way we are supporting our exports and we are getting into that stuff, we started a frozen plant. So what we see is that this export will certainly be growing faster, much faster than what our domestic business would be doing. But being a very small pie, share of business would only move up by, say, 50 basis point kind of faster.
Okay. Now, in the end, do tell us, sir, as an outlook on the upcoming festive season, are you looking at any further launches, and where do you see the maximum sales and volumes coming in from for the festive season as a whole for you?
So, festive season, it's both the modern trade and e-com. Which do very advanced planning. I mean, they are onto it. Our teams have done the joint business plans and all that stuff. So we see quite an excitement and a bullish plan on that stuff. On the other side is the general trade, which happens, on much closer to the time, when the season will come in. But overall, there's a very positive momentum amongst the trade. Consumers and shoppers, is the moment of truth which only you will see closer to the time.
Right. Do also tell me your plan of action, sir. We are seeing this sharp pace with which quick commerce is growing, and you talked about e-commerce. So companies that are offering, under 10-minute kind of a delivery, are you tying up with such companies for the upcoming festive season so that you can, deliver, much faster all your goods that could be perhaps taken off much faster than the shelf from this quick commerce space?
Certainly, yes. Quick commerce is doing extremely well, and it's getting popular day by day. It's at the end of the day, it's about convenience to a shopper and a consumer. It's doing well, and we even today is there on most of these. In fact, almost all the QCom platforms today. With respect to the gifting part or the festive part, of course, their plans are also very aggressive. They're going very bullish, and we have tied up with most of them now.
All right. Well, on that note, thank you so much, Mr. Verma, for detailing for us the insights from Q1, and I wish you all the very best for the upcoming quarters. Thank you so much for speaking to us on Business Today.
Thanks, Sakshi.
All right, viewers, we'll wrap it up at that. You did hear from the management what has really gone in as key contributing factors for the quarterly earnings and the outlook going forward, both in terms of demand, volumes, the margin outlook, the market share, all of those details, and the outlook on the festive season as well. We'll continue to bring in such insightful conversations from top managements that are reporting their numbers. So do stay tuned on to with us on Business Today Television.
Hello and welcome. The Union Budget for financial year 25 implicitly accepts that job creation is the central challenge confronting India today. And to this end, a slew of new incentives and schemes have been rolled out by Finance Minister Nirmala Sitharaman. What we'll do is use the next 40 minutes to ask a super sharp panel of experts on whether the new schemes that have been created will actually succeed. There are